All right, what's up, guys? It's Lou the Shoe here. As always, I got my man Heath Lefort here from Fairway Independent. Super pumped. He actually just talked to me about this program a little while ago. They have a few different programs related to renovation loans that can help your buyers get into the property that they want, upgrades, whatever. You can refinance into them. There's a lot of good value. So I just wanted to bring Heath on here real quick because I know that with the market starting to shift a little bit, buyers having less and less power as it is, these buyers got to be a little bit more creative. And if you have a buyer that is looking for a pristine property, but they have time in order to kind of move in and they're, whatever, I think this might be a really decent opportunity for them to kind of utilize it in their favor. And Heath can talk a little bit more about what we have here today. So Heath, take it away.
Thanks, Lou. I appreciate it. Welcome, everyone. Thank you for having me on once again, Lou. First thing I want to say to everyone is there's no doubt that the industry, being the real estate industry, has affordability issues. Huge affordability issues, an interest rate climate that, relatively speaking, historically speaking, is still quite low, or on the average, if you will. But the affordability is really the issue in the industry. And I particularly feel that we'll start seeing more and more buyers looking at properties that perhaps might need work. In the state of Rhode Island, we have a host of properties that have failed septics, need septics replaced 12 months after purchase. And I've done a host of septic failures in the state of Rhode Island with some of our great renovation programs. But in a nutshell, folks, particularly folks that want to get ahead in their equity position on one of the longest standing assets that they'll have on their balance sheet, called real estate holdings, they're going to look to build that equity. And there's a host of properties out there that need work, and they're listed as such. You'll find that some of these listings will see cash buyers, investor buyers, but there's really no mention on the MLS whether or not renovation financing is available. And I feel that is a disservice to the consumer / buyer that are looking at one of the longest standing obligations that they'll have on their personal balance sheet. And we are here to educate the value of renovation and the misconception around it. So today's call is to basically just stay very macro. We're going to have future calls around renovation, and we'll get deeper into it. But the point of tonight's call is just to cover a few bullets and a few misconceptions around renovation financing. So before I get into it a little bit, Lou, if you wanted to cut in behind me before I get into it, certainly go right ahead.
Yeah, no problem. I guess I just wanted to say that with these renovation loans and stuff like that, it's just another tool in your arsenal when you go to put these offers in. People, as far as like listing agents go, I'm starting to kind of understand that there are some listing agents out there. There are some agents that don't necessarily know everything about rental loans. They don't know about the 203K loans. And I personally didn't even know that there was a VA renovation loan. So that is something that is really new to me, and that is absolutely fascinating. So I think that people can definitely take advantage of these programs to better set up their future, put a little bit of sweat equity in there. And, maybe even if you get a property under value, you put a little bit of sweat equity in, and then it ends up being a pristine property, what you want, everything that you pictured within your budget, and you can live in it. Why not do that instead of just settling for something that's on market because you need something? So I think this is a really good opportunity. And is there anything specifically that you wanted me to touch base on, Heath? I'm sorry.
No, I just think that, I think the market is certainly underserved in this area, simply because we have how many realtors in Rhode Island now?
Lots.
Like I heard close to 10,000 agents
I think
in
right
Rhode
now, I
Island.
think we're a little bit under it. I think there was a lot that ended up leaving, but yeah.
Yeah, and that continues to decline from what I'm hearing. But if you have that many licensees, and a host of them are part-time, they're not full-time. So that's why we have a misconception in the market towards renovation. Renovation loans are, they don't take 60 plus days to close. We at Fairway, we own our own appraisal management company. So therefore, we can create quite a bit of speed around the appraisal. And our appraiser panel is well versed towards renovation. As I have been in this industry for 28 years and being a renovation specialist over the years and into the current market, I bring that 28-year of experience to say that here at Fairway, our average closing time is 32 days.
Wow.
And 32 days is within the bid paperwork that we need to receive prior to ordering the appraisal. So I work with contractors here in Rhode Island so we can streamline that paperwork effectively. My renovation department makes up quite a few team members, and they facilitate that bid paperwork on behalf of the realtor, on behalf of the consumer, and they work directly with that contractor to expedite that paperwork. And as that gets expedited behind the scenes, we are then ordering the appraisal. And that appraisal can take just a few days from start to finish, and we're still well ahead of that 32 average time frame. So today, I wanted to cover the turn times, because that's a huge misconception in today's market. It's an excellent conversational tool to lose point, to have this product in the tool belt of the buyer, in the tool belt of the listing agent, and even the buyer agent. And if you think about it, as a buyer agent, and you have a host of buyers that are within your pipeline, do you really want to discourage a buyer on a property that is structurally sound and is great in the basement and smells great in the basement, the attic's great, but perhaps the kitchen, needs some work, or there's a slight mold issue that can be rectified, or there's a failed septic that we can embed within a renovation? You can actually go after that property and have great negotiation on the buyer side. Agents, if agents are on the call, you can be known to your market with the consumer that would love to sell their house, but they feel that they can't because of the work that's required on it. So when you have renovation behind you, whether you're a consumer or you're a licensee on the realtor side, both buyer and on the selling side, this product is extremely valuable because it creates one important thing in our business, and that's a real estate conversation. That is the most valuable product in our business is the real estate conversation. If we did not have real estate conversations, we would not have transactions. So with that being said, we at Fairway, we carry all 5 products. And why do we carry 5 products? Because we do it well. We just don't have one renovation product and slip on it every step of the way. We do all 5 products excellent across the renovation team. And we, as a company, have a strong initiative towards renovation in this particular market. And I'll share why. In New England, the average age of housing stock in New England is greater than 60 years of age. The average age of housing stock in the United States is 40. Commercial is 39.
Wow.
So if you think about the amount of investment that the New England housing stock needs to keep their economic life within the collateral / shelter that Ben Franklin created years ago as a founding father, as a Mason.
Shout out to Ben Franklin.
I would say Ben Franklin would say renovation is extremely important in New England. So with that being said, we have the FHA Limited 203K that goes down to a 620 FICO score. You don't need a 20% down payment. You only need a 3.5% down payment to facilitate the streamline. Now, the difference on an FHA 203K Limited, you're allowed up to 35. We hold back 5 for unanticipated further expenses. So really, a full 30 can be realized with a 203K without any inspectors going out and no inspection costs related to that transaction. It is a very popular product within the renovation space, and the costs are a bit lower. And the beauty of the FHA product, it does go up to a 4-unit primary residence. And do you have a question, Lou?
Yeah, I just had a question. Can you repeat that when you said something about the appraiser going out? I missed that one. The inspector?
Oh, yes. So typically across most renovation products, an inspector has to go out to the property to ensure that what is being done on that property is up to code. So inspectors do get facilitated across the majority of the renovation product suite that we have. But when it comes to the FHA 203K Limited, no inspectors would actually go out.
Oh, wow. Okay. So, all right. So that would be because of the fact that the max renovation budget is $35,000. They're basically saying it's less than a $35,000 repair. So therefore, we don't have to inspect it. So this will be that good particular product. Is that correct?
That is correct.
Okay. Cool.
As we go into the second FHA 203K standard, that's the full renovation, same FICO score, same down payment, same collateral type, right up to the 4-unit primary. But the beauty of this program is you can go up to a full 110% of the future value of the property.
Wow. Wow.
So that's what really separates FHA. However, with the standard and the full that we're discussing, the inspectors would have to go out to the property.
Okay.
Okay. The VA renovation, very unique product, to Lou's point earlier, 100% financing for the veteran. And they can include up to 50K in the renovation.
That is amazing. I'm so happy to see that, because there's just another benefit to be able to help out all those veterans. Like the VA loan, just as it is incredible. Put this in place of that as well. That is so cool.
It is really great to, give back to the veteran, because frankly, even the VA standard loan outside of renovation is an underserved product in the business. However, it's the best product you can have in
Yeah,
the business,
it
no
is.
MI, 0% down payment, 6%, 4% seller concession rather. And again, very underserved because folks in the industry think that you can't pass most of the cost to the veteran. That's just not the case. You can pass the majority of the cost to the vet. So that's one misconception alone with just the standard VA. But knowing that we're staying within renovation, renovation financing does exist for the veterans all the way up to 50K.
So
Um,
I was
yeah,
just going to say, so I'm seeing here, so on all these other loan programs, I am seeing that it's 1 to 4 for primary residence. The VA one, it's only for single families.
yes,
We,
correct.
we
Yep.
definitely have to make that adjustment there, and just kind of like let everybody know that if you're going to go into a VA loan, um, now you could still get a VA loan for up to a 4 unit, but
Yes.
if you're going to use the renovation loan, it's got to be only single family. Um,
Yes.
and then the other thing was the 90-day renovation loan term. So after closing, it sounds like these you'll have 6 months on the rental loan side. Is that correct? Versus 90
That
days?
is that is correct. However, we as the entity financing, we do have arrangements with HUD directly with HUD. HUD does allow 12 months. So if we need a brief
Oh,
extension beyond 6 months, we will do that depending on where the renovation is. Um,
okay.
but we could extend that if needed. Not the full 12 months, but certainly a few months.
So in other words, it's like it's not like a set in stone. All right, they got to be done or pay up in 6 months. They probably just don't. The bank probably just doesn't want to see the property sitting there with nothing done to it for 6 months.
Correct. We'll have to see the majority of the work done before we extend just a few months. And
Right.
and frankly, we'll never be in that 11 or 12-month category because that just tells us that the renovation is not being done correctly, right?
Yeah.
And we have an excellent draw team. It's all automated right on the handheld for the contractor. We're one of the very few companies that have automated the renovation and draw process for the contractors. But that moves us right over to the Fannie Mae home style, same FICO score, 97 LTV. There's a misconception. But of course, you have to be a first-time home buyer. But think about that. You can get conventional home style renovation financing up to 97%, 3% down, 1 to 4 family primary residence, all the way through a single family second home. And we'll, in fact, do a single family investor property for the home style.
Wow. See, oh
Yeah.
yeah, see that? Wow.
Mm-hmm.
That is
And
amazing. With you said 90, oh, first time home buyer, and then with non first time home buyer 5% down.
yeah, yeah.
So you could put 5% down
Mm-hmm.
on a single family investment property and have this renovation loan.
No, no. The investor would be a lower LTV. So that non first time home buyer at 95 would have to be an owner occupied situation.
Oh,
Yeah,
non first time home buyer, but owner occupied regardless.
yeah,
Okay. All right. So
yeah. So
I'm
you'll
sorry.
notice up there 1 to 4 family up to 75% of as completed value. But that's mainly on the investor side. So the LTV on the investor side gets knocked down on the LTV.
Okay.
But when we're dealing with a primary home, we can go up to that 97 for a first-time home buyer, and up to 95. But it does have to be a primary home for the 3 to 4 primary.
Okay. Gotcha. All right.
And Freddie too, same thing. and 620 FICO, 5% down, but just excellent programs. I mean, it's just unbelievable how the renovation game has been underserved.
Mhm.
But it's, every approval that I send out to my buyer, I let them know that they're eligible for renovation financing too.
Wow, thank you so much for doing that, Heath, for our buyers, because I didn't even know that you did do stuff like that. Because I mean, realistically, without having the conversation with the buyer about this potential, like the power of this loan, they probably would never know. So the fact that you're introducing it to them and saying, "Hey, listen, this is an opportunity to get all your renovations done, wrap it in with the loan, and that way you can just walk into your beautifully renovated house on day one." Well, after the renovations, obviously, but
Mhm. Mhm.
I mean that's a beautiful thing.
It really is. If you think about what's happening in today's market, and you can attest to this, Lou, for the audience,
Mhm.
how many first-time home buyers have bought Rhode Island housing stock with very little down payment, very little amount of money behind them and buying a house, but they bought the house anyway, even though they hated the kitchen or the bathroom, or they really wanted to get this fixed. The seller wasn't willing to fix it. It still passed inspection and the finance component as well. But how long is it going to take that first time home buyer to accumulate a savings to actually do the renovation that they want? It's going to take them forever. And how about all the unanticipated repairs that house is going to need once you're actually living in it? I hear all the time a lot of these, if you think about it, and I'm not saying that the majority, but from time to time, if everyone is buying and flipping property and they're trying to do it at a very fast pace, don't you think some things are going to be missed? And don't you think some of those things that are going to be missed are going to be found out once that buyer is actually living in the property? Of course there is. And you're not going to really see what has taken place. So my advice to anyone buying a house in Massachusetts, in any market, frankly, is any major work that has taken place within any property, make sure you get the evidence of the permits from the town hall. We're seeing a lot more clouded titles, mechanic liens on titles now as a result. So I'm all about educating the consumer, the most powerful person in our real estate, the consumer. So I bring extreme caution to any heavily renovated property. And it's all public information. You just call town hall, make sure that the kitchen that you're seeing that got remodeled, make sure a permit was pulled, right?
Yeah.
Uh, Make sure permits have been pulled. If they haven't been pulled, okay, then that's the risk that you're taking within the longest standing asset that you're about to purchase. So, and I'm here to educate, I'm here to facilitate and make sure that our consumer is protected every step of the way. And that's very, very important. So
And we definitely want to try to minimize risk as much as possible. So thank you very much for pointing that out, Heath. That was actually going to be my last and final question I had for you on this thing. Before we wrapped it up, I wanted to ask you about those contractors. Like, say I wanted to go in with a 203K loan. I
mhm.
pick any contractor in my Rolodex and say, "Hey, you're a plumber. I choose you. Go and get it done."
Yeah, you can do that, but I think what you're going to find as an experience, because our paperwork for the contract, we have a nice contract pamphlet, and they have to fill out their W-9, which is a tax identification form. They have to provide us the appropriate insurance. They have to provide us proper references and this and that. So you
Yep.
can't really just get a fly-by-night contractor. And in Rhode Island, you could be a contractor for $150
Yeah.
in Rhode Island. So, that's why it's so important to work with someone like myself, because we're already partnered with, accredited contractors that have, that we know, or our realtor network speaks highly of. So that's important to me, and the renovation process, it can be easy, but it can become very difficult, particularly with a contractor that doesn't want to submit the required paperwork,
Yes.
or a consumer that is trying to save like money on permit cost and this and that. Like, that's not the ideal mindset that a buyer should have when it comes to renovation financing, because we want to make sure that it's done right.
And
We don't want to, cut corners, because at the end of the day, we're all about high satisfaction every step of the way. If it takes a little bit longer to protect our buyers with the required paperwork of the contractor, we're going to do that. Because at the end of the day, that's what we care about the most. We originate relationships. We don't originate transactions here at Fairway. We originate relationships, and that's the difference. And frankly, I can afford to do that. I've been doing it 28 years, so I care about the relationship, one loan at a time.
and I just wanted to add on to that, and that was going to be kind of like the answer that I was looking for is, yeah, like there's nothing wrong with getting different quotes for different jobs. There's nothing wrong with that. But there's a lot of contractors out there that if you don't have a relationship with them, or if Heath doesn't have a relationship with them, or if I don't have a relationship with them, it's going to be hard to get the documentation. It's going to be hard to get them over there to take a look and give you a quote on a job, let alone do it and get it done and abide by these, this program. So it's going to make things a lot harder versus having these contractors already set up and utilizing people that Heath and I already know, or, people that you rely on, that that are going to be trustworthy. Because that's what it comes down to, is like, like you said, Heath, it's a relationship game. We have relationships with these contractors because we know and trust them, and we know they're going to do a good job, and we know that they're going to do a good job for you, let alone this other guy, you just randomly called. He's got the lowest price in town. It takes him 5 or 6 weeks just to get his, I think you said W-9, right?
W-9, yep.
It
Tax
takes him 6
identification.
weeks just to get his W-9 in. So, and that does happen. That happens a lot. And deals fall apart if you give it too much time. So you can miss out on a really good opportunity, and you could price yourself right out of the market.
It's so true, Lou. And, just to reference, there's a little bit of back and forth with the Fannie and the Freddie. You'll notice that the max LTV, it says up to 95, up to 95. So once you start getting into the 3 to 4 unit primary home, that up to 95 is obviously reduced.
Okay.
So I just wanted to reiterate that for everyone. But if we're dealing with a single family home, that LTV that everyone's seeing at 97% is true. You can go up to 97 on a single.
Oh wait, I was looking at refinance. Okay, I see.
Yeah,
I see what you're saying.
so that was on the refinance side.
This is up to 95% and up to 97%. This is up to 95%. Okay.
Yeah. And, of course, we'll vet that all out. And the other caution, too, like buyers that are best suited for this program are obviously, they have great job history. They're good with their paperwork. They want to submit we require a 2-year look back on tax returns, W-2s, 2 months worth of bank statements, 401k contributions, obviously the most recent quarterly statement through a 401k is needed. And basically the buyer pool here within renovation, we're here to facilitate and guide within that paperwork. But certainly that paperwork is required a little bit more so with the renovation, because it is a very detailed specialty type program. And we want to make sure that we're vetting out every client correctly with the paperwork. And we want to make sure that they're going into this the right way. And frankly, on the renovation side, like for me, like I would want a buyer to show me some saving disciplines through a pre-tax vehicle, such as a 401k, as you go into renovation finance. And frankly, that's important with any purchase of real estate, and we see it all the time. If you look at a lot of the servicing folks, and we're able to see the propensity of payment histories. We collect all that data in the industry to know what the loan defaults are, first payment loan defaults. And it's so true. If you look at the first payment default buckets within the servicing portfolios across the entire industry, it's always the case. It's the first time home buyer that went into the transaction with very limited funds. They bought a house that, had the guts of the house were already ready to fall apart. Furnaces, oil tanks, economic life of a roof. And all of a sudden they have an unexpected repair and they have absolutely no reserve going into the transaction. That's where we see a lot of the first loan default. So I bring a lot of passion in that area, and I will educate on the importance of having some amount of reserve towards a purchase. And if you don't, that's where a renovation loan comes into play. You can avoid those unexpected repairs, knowing you have limited reserve. So we're here to educate. I can talk forever, but I will stop. Thank you, Lou. Thank you, everyone.
Absolutely. And just for everybody, I'm going to put Heath's information, his contact info, right on the bottom of the description. As always, reach out to Heath from Fairway. You'll see his phone number right there on his screen, 401-641-0344. I will also put in the description, as I said, and I'm also going to put in the his email address and everything too. So you'll have that. Contact Heath, 28 plus years in the industry. Fantastic guy. Truly, truly cares about his clients, his customers, his database, and he truly cares about the community. So if you have any questions at all, he's a great human being, a great resource, and he's more than happy to help out anybody.
I'll never forget where I came from. In fact, many years of administrating banks at a very high level in the start of my career. Like my mindset now, 28 years later, is to really give back everything I possibly have gained in the last 28 years. And as I said earlier, I'm originating relationships. That's what I'm originating. I'm not originating transactions. I'm not interested in a transactional approach. I'm truly interested in building that relationship and going deep into that relationship. Because I have found over the years that has the greatest impact to your community. Mm-hmm. When you can actually help out someone that everyone was shying away from because it didn't mean a transaction to them at that particular moment.
All right. On that note, we got to go.
All right. Thank you.
All right. Thanks.
All right. Thanks, Lou, the shoe. Appreciate it.
All right. Bye,
All
guys.
right,
Thank you.
take care.